Thank you, Gabriel. Thank you for the invitation, and good morning to everybody. It's a great honor to be here with you today in Dublin. Sometimes the trouble with an economy can be illustrated by an animal, or rather the absence of one. Many countries have an animal as a national symbol. Ireland, for example, is often referred to as the Celtic tiger, symbolizing its awakened economic power. The Dutch have the lion, no lack of self-confidence there. The Americans have the bald eagle, all impressive animals. But what animal symbolizes Europe? Some argue for the bull, and indeed I think it's displayed on all EU residence permits. But of course, there is a problem with the bull. Because as you know, it refers to the story from Greek mythology where the Phoenician princess, Europa, is abducted by Zeus, disguised as a bull. But in this story, we are not the bull, we are the victim. And in a way that painfully illustrates how we Europeans sometimes fall into the role of a victim when we could be taking matters into our own hands. And now the time to do exactly that, take matters in our own hands. And perhaps we can take an example from Ireland. 2 years ago, my predecessor was here in Dublin to give the Whitaker lecture. And in his lecture, he recalled how back in 1958, Thomas Kenneth Whitaker initiated the program for economic expansion. This policy program opened up the Irish economy to foreign investment and industrial development. Ireland joined the EU and ended its dependence on agriculture and tariffs. It was the start of a remarkable episode of economic development, and the Celtic tiger had awakened. Today, the European economy stands at a crossroads not unsimilar to the one your country faced almost 70 years ago. The European economy is not doing exactly badly, but we could and should do much better. Our productivity growth is too low, and that makes it particularly difficult to deal with the challenges of our time. As outlined in the Draghi report, the EU must unlock an estimated 800 billion euros in annual investments to meet its ambitions for climate, digitalization, defense, and innovation. And the root of the problem is threefold. First of all, we still do not have one European economy. Substantial trade barriers between the EU member states persist, and according to IMF research, productivity in the EU could increase substantially if trade barriers were to be reduced to the level observed among states in the United States. Second, our financial markets are highly fragmented and do not deliver sufficient risk capital for new innovative firms to grow. As we all know, European financial services are heavily bank-based, but banks are less well suited for financing innovation. In particular, there's a strong need for venture capital to enable innovative firms to grow beyond the initial startup phase. And as recently shown by the ECB, the availability of venture capital in the United States is 3 times higher than in Europe, with the gap widening over time. Third, the EU budget is still focused on the economy of the past and not so much on providing the public goods that are necessary for the economy of the future. Agricultural subsidies and cohesion funds together account for more than 2/3 of the EU budget, while expenditures in research, climate, defense, and cross-border infrastructure remain low. That is where we stand today. If we want a modern, innovative, and productive European economy that is ready for tomorrow's challenges, we need to change course, like Ireland did in the 1960s. So basically, we have to do 3 things. First of all, we need to deepen the European single market by addressing cross-border barriers, introducing more harmonized rules, and curbing national state aid policies that hinder innovation. Addressing cross-border infrastructural barriers, both digital and physical, may require additional public investment, because this generally concerns public goods. And such investments may benefit from coordination at the EU level, and I'll come back to that in a minute. To further harmonize rule, the EU needs to limit the possibility for gold plating by member states by opting more for regulations rather than directives. On state aid rules, there has been a progressive relaxation in response to recent crises. While national state aid was understandable and sometimes effective under the circumstances, it has also distorted the level playing field. Therefore, the European Commission should strictly enforce regulation of state aid at the national level. And instead, it should provide European state aid in a targeted way and solely when it's clearly justified. Capital markets are one area where deepening of the single market is particularly necessary, and this is my second action point. Promoting the savings and investment union is key here. We need to enlarge the pools of capital available for investment by stimulating households to invest more of their money rather than putting it all in savings accounts. Pension reforms can also help here, and I very much welcome the proposals by the European Commission announced recently to stimulate the build-up of supplementary pension provisions. And maybe Ireland and my own country can guide other partners in this respect. Furthermore, we need to make sure these pools of capital are invested more in equity, including venture capital, by taking down cross-border barriers. And the Savings and Investment Union strategy presented by the European Commission is aimed at achieving precisely that. Let me elaborate a little bit on the issue of venture capital. Over the past years, the EU has tried to stimulate venture capital, and we can and should build further on that. We could streamline the registration process for the European Venture Capital label to encourage more funds to participate. We could expand the European Innovations Council equity co-financing model by introducing guarantees on investments. And this could also be considered under other public programs supporting venture capital investment, such as by the European Investment Fund, the European Investment Bank, as well as national initiatives. And we could reduce cross-border barriers in the field of tax procedures, insolvency proceedings, and corporate governance. And this could be combined with simplified reporting and compliance mechanisms. I realize this is quite a list. Integrating our capital markets is a very big task, but on the sunny side, the upward potential is also huge. If we manage to rise to the occasion, Europe could truly become an innovation union as well. The third area where we can improve is by spending taxpayers' money through the EU budget more strategically. The next multi-annual financial framework, due in 2027, should be modernized with a redirection of funds towards the provision of European public goods catering for Europe's future. And those are goods and services that are more effectively provided by the government than the market, and that are more effectively provided at the EU level than at the national level. There are several ways of doing this, for instance, by redirecting current spending priorities. This is ultimately a political decision. Some argue in favor of the issuance of common EU debt to finance the EU's new priority. However, if we do that, this should be accompanied, in my view, by a reduction in national debt levels to ensure that total public debt remains sustainable. Because ultimately, the national and European taxpayer is one and the same person. Moreover, while acknowledging the diversity of the public finances at national level in the EU, the average debt to GDP ratio in the euro area is high and should be reduced. And it is of utmost importance from a monetary and financial stability point of view that public finances in the euro area remain sustainable. So, to sum it up, deepening the single market, building a true savings and investment union, and modernizing the EU budget. That's the way forward. Let me wrap up. Sometimes we Europeans are too pessimistic about our future. Instead of acting like a victim, we should take ownership and start building on our own strength. We have tremendous potential. The EU is the world's second largest economy. And in a world where everything seems uncertain and money seems to be able to buy anything, we have strong institutions governed by the rule of law. And this is a strength not to be underestimated. We should build on this strength by making the European economy more integrated, more productive, and more innovative. This also calls for the selection of an animal to symbolize the European Union. And please, don't let it be some non-existent animal designed by a committee. So my proposal would be an octopus. First, octopuses are among the most intelligent animals on Earth. Moreover, they are remarkably resilient as they are able to regenerate certain pieces and limbs and what do you have. And that aligns very much with Europe's repeated recoveries across history. And also, few animals are more adaptable. And finally, when it comes to creative intelligence and ingenuity, the octopus is nearly unmatched in the animal kingdom, reflecting the need for innovation. And if you're not convinced yet, I can recommend watch the Oscar-winning documentary, My Octopus Teacher. Indeed, intelligent policies we need, like the ones initiated by Ireland in the 1960s. And as we are now talking about 27 countries instead of one, we also need a renewed sense of European purpose and unity. Being only a very simple central banker, I'm somewhat reluctant to quote famous writers beyond my level of understanding, but I could not help thinking of the famous line by Oscar Wilde, "Life imitates art far more than art imitates life." He wrote this to remind us that what we imagine together can become the world we wake up to. So let the art of our work, even that of central bankers, be something worth imitating. And the Europe we shape today will define the Europe we live in tomorrow. Thank you very much.